All right. Well, welcome back to the Rice Report, everybody. As you know, here on this show, we're pretty shadow banned, but the faithful following here, you guys love these conversations because we talk about the three things you're never supposed to talk about in public: money, politics, and religion. And today we are joined by author Todd Sheets, former investment banker. He writes a Substack. He writes books. He's got a new book coming out, and we are going to talk about the markets. Today is all about money. It's all about understanding what in the heck is happening at the Federal Reserve, what's happening through the marketplace itself. So please, everyone, welcome Todd. How are you, sir?
I'm doing great, Eric. How are you?
Doing good. Doing good. Well, let's get to it. This market, despite what we're hearing in the news, is fairly confusing and I don't believe to be transparent at all. We've had jobs reports readjusted for the past 4 years, probably longer than that. I've just paid attention to it that long. Significantly overstated. Unemployment is, they're now telling us 4.7% or whatever it is stable and moving. Yet we have people out there in the jobs industry saying 10 million layoffs are going to happen by the end of 2025. We've got inflation. They're telling us it's 2.7%. Anyone who's been to the grocery store or gas station knows that that is a very low ball number. And of course, inflation is caused by monetary printing and extending or inflating the amount of monetary supply in the system. We are hearing all kinds of crazy stuff this morning. President Trump actually asked one of the governors of the Federal Reserve to step down over an investigation on mortgage fraud. So we're going to talk about that. We're going to run through history. But Todd, what are your overall feelings for the market? And again, there's two separate stories out there, very bifurcated. There is one segment of the market that says this is just how it works. It's been doing this for 100 years. This is how the system is. We're totally fine. There's going to be a bull run and everything. The economy is great. You have another side of the story saying this system is broken. It continues to break consistently, and I don't see a bull. If there is a bull market ahead, it's going to be a fallacy or a fake pump. Where do you sit in that? There really are. There's just those two camps out there, and one's louder than the other for sure. But where do you sit in that?
Yeah, so I think it's a time to be very careful and very cautious. Maybe not undeservedly so. I mean, it's very hard to predict actual market peaks and collapses. There's a few people that can do that and have success doing it. For most people, it's kind of a losing game. You mentioned Warren Buffett a little bit before we came on, and I've talked recently in some of the Substack pieces about his mentor, Ben Graham, who came up with this concept of Mr. Market, who was this guy that sometimes is feeling so optimistic. He thinks the world can only go up and up and up, including the stock market. And then other days he becomes so pessimistic, he thinks it's the end of the world and nothing will ever rise again. And, the reason for creating that was to avoid these extremes for most people, and to kind of follow a long-term sensible plan, invest in good growing businesses and don't get caught up too much in the market moves. At the same time, I think it's an important question because one of the key things is for people, not to get lured in by a rapidly rising market and think that this will go on forever. There will never be a downturn and, put too much of their eggs in that basket. And then they get hit by the downturn and they pull out and think, well, I'm out of this thing. And they stay out for a decade or so and miss the recovery. So it's a very important question. It also has big policy implications. Yes. Because I think one of the very underappreciated issues is each of the three major bubbles of the last 100 years. So we'd be going back to 1929 in the stock market, the tech stock bubble in the 1990s, and then as I wrote about in my book, the housing bubble in the early 2000s, the Federal Reserve all played a critical role in all three of those situations. So, we have to be aware of it from a policy perspective. Also, there's a lot of talk right now about the Fed pushing interest rates down further. There's room for another cut. I don't necessarily agree with that. And I think we're at one of those points where there's a risk of a Fed cut could take what has been a gradually building bull market, largely around the idea of the potential of artificial intelligence and what that can do for the economy, which I'm a big believer in and a big bull on the real life impact of artificial intelligence. But we're in kind of one of those situations that's not unlike what we saw in the 20s or in the 90s, where an ill-timed rate cut, could be the spark that sets the market on fire to where it really takes off and goes crazy for a period of time. So.
Well, the Fed is in a bit of a Mexican standoff, right? So if you're lowering rates, you're going to increase inflation. So inflation will go nuts. You'll stimulate market growth, obviously, but that'll be through the market. Will that provide economic relief? Because there's a big difference between market and economy, and the economy is struggling while the market is actually doing pretty well.
Yeah, and absolutely. And this is one of the most important points. I mean, starting in the mid 90s and running especially throughout the 2000s and the 2010s, we've seen the Fed push interest rates to historic lows, unprecedented. And it has not generated above average growth. The economy for the last 20, 25 years has basically been growing at barely over 2%. Now, if we go back to early periods, we talked a little bit about economic history, we go all the way back from 1800 to 1930. For most of that period, which I call the limited government era, some people call it laissez-faire. I think limited government's a little more relatable.
I agree.
We had a very limited government role. The federal government spent on average during peacetime 3% of GDP versus 24 to 25% today. They consistently ran budget surpluses during peacetime as opposed to deficits. They never tried to stimulate our way out of a downturn. They just let the market forces run their course. We had no Federal Reserve until 1913. So for the vast majority of that time period, there was no Fed. And we also had a gold standard in place, which kept the federal government from printing money. And as a result, over long periods of time, we had no inflation. Right. Well, during that period of time, the economy grew at almost 4% a year. And I'm talking about real rates of growth over and above inflation. So, without any involvement by a Fed or the federal government trying to stimulate us or do those kinds of things, we grew almost 4%. That happened again after the Reagan era reforms, kind of the free market reforms of the early 1980s, kicked off a boom from the, early 80s through the end of the 90s. We grew at almost 4% a year, not quite that high, more a little above 3.5%. So, getting back to your question, the Fed has engineered these low interest rates. It has not produced high rates of economic growth.
Correct.
Now, there's other factors at play, but it's very clear that all it has really done is stimulate the financial side of the economy. So it played a role in the tech stock bubble, a very important role at the end of that period of time. It was the second key factor in driving the housing bubble that then collapsed in the mid 2000s when the Fed finally started trying to normalize interest rates. And then it went back to this same playbook in the early, in the later stages of the great financial crisis and ran it throughout the 2010s. And all we got is, high stock prices, for a period of time, artificially low bond prices. And now we're back with very high housing prices and a big affordability problem out there right now. So yeah, it has not done much for the real economy. It has inflated the financial economy, and that's caused a lot of issues that we're still dealing with.
Yeah, the financialization of America has made it easy to manipulate numbers, right? It really has. You're speaking exact truth. The financial economy is booming. There's more financial products than ever. There's plenty of fees being generated on Wall Street. There are plenty of returns for investors. But those are the investors who can afford to put money at play. 70% of our economy, our people in this country, can't afford a $1,000 emergency bill. 38% can't afford a $400 emergency. So when you're looking at that high of a percentage, and put it in numbers, right? There's 330 million Americans. 210 million of them can't afford a $1,000 emergency. But Wall Street's booming. And this is kind of the American way. And where do you see the Fed playing this role? Is the Fed kind of feeding Wall Street, negating Main Street? What are you seeing right now with this current Board of Governors?
I think this is a policy trend that's been going on since the mid 90s. My view of it is, when we in the early 1990s, the collapse of the Soviet Union created this movement towards globalization. And there was this expectation that the Soviet Union and even China would enter the global market, and that as they did so, they would become democracies. They would do business under Western terms, the kind of terms that have, lifted up, hundreds of millions of people here in America and around the world, and that type of thing. But those things never happened. What did happen was that we had this huge offshoring of jobs because of the low wages in these countries. And nobody should be mistaken about the reason for the success and the rise of China. It is primarily built on the failures of communism that came before this period of time.
Correct.
By the early 90s, even as late as the early 90s, and they had gone down, after Mao died back in the 70s, they started moving down a more free market path because there was so much famine and poverty, over 500 million people living on less than $2 a day. They had to go in that direction. But even by the 1990s, per capita incomes were like 1.5% or so of what they were in the United States and in the Western world. Well, that's the low wage model that enabled them to step into the world's economy and start growing. Well, as this happened, this started causing some issues in the United States. We had a series of financial crises that happened back in the 90s. There was the Mexican peso crisis, there was an Asian debt crisis, and there was a Russian debt crisis. And as those things took place, money started moving around the world in ways that it hadn't ever before. As those things took place, the Fed got into the habit of preemptively pushing down interest rates to try and keep these crises from becoming a bigger deal. And they started to get addicted to this idea that these low interest rate policies could prevent a more significant economic decline from developing out of this. The last of those three during the Russian debt crisis, which I think was 1997,
Yes.
was the one that triggered the last phase of the tech stock bubble. So I don't have the numbers exactly in my mind, but it's something along the lines of in the 24 months before the Fed started dropping rates after the long-term capital management bailout, which was related to the Russian debt crisis, the markets had been up like the NASDAQ had been up, maybe 25% or something like that. Nice growth, but not overwhelming. From the time of the second rate cut in 1997, around the Russian debt crisis and the potential failure of long-term capital management, until the peak of the NASDAQ in early 2000, the tech stocks were up over 200%. So it's very clear that rate cut triggered that second blow-off of the tech stock bubble. And, the Fed got involved in doing this. And once you go down this path, it's a little bit like, it's like an athlete who starts taking steroids. And then people start saying, are you taking steroids? And they start lying about it, but they're addicted to it. You can't stop at that point, because if you stop, then all of a sudden, you're falling to the back of the pack and that kind of thing. So we've got onto this path where they've consistently reduced interest rates to try and preempt these different issues. And it has created this over-financialization, which is a big part of what's created this difference that you're talking about, where the Wall Street crowd or the ownership crowd, it might not even be Wall Street people, just people who own a home or you own stocks, they've benefited from all of this. But the working class hasn't, because the jobs have been going overseas. And at this point, it is particularly a problem for young people coming out into these highly inflated housing markets with stock prices at these levels and that kind of thing. It makes it hard for them to get started. You can't buy a home and that kind of thing. I think that's where a lot of the frustration is. That's what we're seeing, I think, with Zoran Mamdani in New York, the socialist, who's probably going to become the mayor. Is that's reflecting the frustrations of younger people who can't afford to buy a home, have trouble finding a job that can generate enough income to pay all the college debt that they've taken out and that kind of thing. So yeah, I think it's been a huge part of the divergent trends we've seen America between the ownership part of America and the rest of America.
Yeah, I mean, and the numbers speak to that. They speak to that tremendously. Right now, we're at 12.9% of all student loans are defaulting. 12.9. That's a huge number for default on anything. Record high in subprime, but record high in subprime delinquency of auto loans. Did a little study. The average home buyer age in 1990 was 31 years old. In 2010, it was 39. This year, it's 56 years old. So it's just becoming more obvious to the youth out there who are the future of the country that right now they're in a situation where only a Mamdani makes sense to them, not realizing what the long-term effects of bringing a communist into office will do, which begs to the question of, have the conspiracy theorists been right? The implementation of a Federal Reserve is a communist construct. It is from the Communist Manifesto by Marx. It's on like page 5. First thing you need to do to control a country is central control of monetary supply, monetary policy, and credit creation. That is the Federal Reserve. So are we marching towards this? And I think it couldn't have been a better time to bring somebody like Trump into office, good or bad or ugly, just having that sort of vision to be able to at least expose that. Although I wish he would talk more openly about what communism is. We don't talk about communism in this country, right? Like our schools don't cover it. We cover Nazi Germany, but we neglect the entire Bolshevik Revolution in Russia and what that did. This is a big problem. Like you said, Mamdani will probably win. I agree with you. I think Mamdani is going to win New York because he's going to have every young person voting for him. And these youth are speaking to what the economy is, regardless of what the market is doing. And I'm going to pull something up here that I put together some stats from Q2 of 2008. And if you believe the numbers, which I don't, and I don't care what names people call me online for that, I do not believe some of the numbers our government gives us. But if you look at the comparing factors between Q2 2008, right before the great financial crash, and the numbers of today, they are incomparable if I can find them. These pictures are so small. It's very comparable. We have, I think I'll try to go off the top of my head. GDP growth in 2008 Q2 was 1.1%. This past year was 3%. Now that 3% was pretty much comprised of front-running tariffs. I mean, no one will argue that.
Yeah.
That probably at least doubled the GDP.
Yeah.
You look at unemployment in 2008, I think it was 4.9%. We're at, that 5.9%. We're in the fours, the low fours. I believe that number to be much higher than that, especially if you look at the actual layoff reports. And I personally have friends of mine that have been looking for jobs for months with tremendous qualifications. You look at inflation. Inflation was in the high fours in 08. Today we're at 2.7. I don't believe 2.7 for a moment. I think the trueflation number that's come out is even more propaganda telling us inflation is lower than that. I'm in Texas. When I moved here in 2020, it was $1.77 for a gallon of gas. $1.77. It's at $2.89 this morning. I just saw it on the way to take my kids to school. So it's clearly higher. And we're not including that. I bought four good steaks for dinner last night for the family. They're nice cuts, but they were $92 for 4 steaks that I cooked myself. So if we look at these numbers and compare them, the other two that I think are important is that we were unchanged in the S&P this past quarter. I know everyone keeps talking about a bull market, but basically it ended where it started, and we were down 2.7 in 2008. So if you remove these numbers, that the GDP, unemployment, and inflation, which I don't believe to be real numbers, I believe they're very manufactured, I think we're actually in a very comparable state of affairs as we were in 2008. It's just my opinion. I'm not a super economist or anything. What are your thoughts on that, Todd?
Yeah, I think I'm not convinced necessarily that we're on the verge of a collapse, but I do think we are in a very dangerous and precarious financial situation, in some ways much worse than 2008. So housing prices relative to the long-term index, which basically there's a guy named Robert Shiller at Yale who keeps an index of housing prices. And for 100 years until the 1990s, housing prices basically tracked inflation.
Yeah.
And then when the Fed first Fannie Mae and Freddie Mac underwent a big expansion. And then the Fed stepped in with its too low interest rates. And that pushed housing prices way off track. And they got up to like if the index, an inflation adjusted index should stay at about 100. They got up to about 190 in 2006 before prices started coming down. Well, we're at about those kinds of numbers again on housing prices. It doesn't mean that we will have a collapse like we did last time.
Agreed.
Fortunately, the lending practices, I don't think now are nearly as bad and out of control as they were in the mid 2000s. So there's been some lessons learned, but we could have a downturn, or we could have home prices just stay flat for a very long time. And they just kind of rob people, especially new buyers, of future appreciation. Stock prices are very elevated. If you look at stock prices relative to earnings, or 10-year adjusted earnings, those kinds of things that Schiller also has, we're at all-time highs on those kinds of measures. So, on top of that, in the late 2000s, federal debt was still less, 2008 federal debt was still right around 38, 39, 40% of GDP. Now it's 100% of GDP.
Yep.
That is definitely a danger. Back in the 2000s, if we go all the way back to 2000, the government was running balanced books. Mm-hmm. By the late 2000s, we were running mild deficits. Today, we are running severe deficits, 6.5% of GDP. These are really dangerous kinds of numbers. So, there are a number of measures out there that should cause us to be very cautious. Hopefully, the Trump administration is clearly very focused on growth and getting this economy going again in a way that it hasn't for a long time. I think there's a good chance that they'll be successful at that. And if they are, then they can help us grow our way out of a lot of these problems that we have, and hopefully avoid, some of the more catastrophic kind of collapses that we've seen at times in the past. So.
Yeah, I think collapse is always a dangerous word to use. I don't know anyone who's accurately predicted a collapse of anything in any sort of time frame. I look at a significant correction. I mean, that's kind of what we're looking at. The markets need to correct. That's what markets do. They've done it for all eternity. And when we look at the economics that we're dealing with on day-to-day basis, so the average person can't afford a home. One of the other comparisons from that chart I just remembered, available inventory was 5 million homes in 08. It's only 2.6 million today. So that's one benefit there. But I also think that number is led by the fact that about 40% of homeowners right now, myself included, have anywhere between 1.5% to 3.5% mortgage rates. Why would we sell our house and buy a new one for 7%? So it's restricting that inventory a little bit. On the flip side of things, the economy right now needs, I'm in off-grid energy generation. I take flare gas and other things, create electricity with it, mine Bitcoin, sell it to the grid, build AI centers, whatever it may be. We are 4,000 terawatts behind China in energy production. They have spent the last 4 years buying as much energy as possible. We keep talking about reshoring manufacturing here. We simply don't have the energy to do it. We don't have the amount of energy needed to compete on a global scale manufacturing wise today. I think that's the next evolution. I think that's Q4 of the Trump administration starts getting heavily into the energy sector. There's plenty of other things to fix, and they're doing a really good job on most of the economy. I don't have to agree with it. The results will speak for themselves 18 to 24 months from now. And I think that if we focus in on that energy sector in Q4, really give regulatory breaks to oil and gas, start looking for uranium, building nuclear facilities. I've spoken personally with a couple of different nuclear CEOs, and they said they've never seen anything like this. The doors that are opening them to accelerate testing. These are mandatory protocols in a modern economy, especially with AI dominating. Do you think that we, first of all, let me ask you a point blank question. Do you think we can turn the economy around without more energy?
No, not without more energy. But I'm also optimistic in general about these issues like you're talking about. And that's I'm really glad you brought this up, because it's very easy to get caught up in these negative things.
Of course.
And especially for somebody sitting out there, it can make them feel like, oh, I should just put my money in a mattress kind of thing and wait for everything to unfold. But it's just not clear with any degree of certainty that it'll head that way. And like we've been talking about, hopefully a number of these initiatives, most importantly, the energy deregulation, but also deregulation throughout the system. If you look at their AI action plan, which I've read, it is spot on.
Yes,
You
it
know,
is.
what they're talking about doing is not doing what Biden was doing, which was like trying to contain AI and anticipate every problem that might happen and create a regulatory barrier today that could prevent any negative things from happening. You know, you've got to let these new technologies run, and then you'll find out where the problems are, and there will be some. And then
Sure.
at that point in time, you know, we'll need some regulations or laws to deal with those issues. But for right now, the most important thing is that we stay at the leading edge of the AI revolution. We stay ahead of China. We lead the world in this technology, just like we did with the internet. And, you know, as a result of the internet, we got these magnificent 7 companies, which, you know, they have issues. I'm not saying that they're perfect, but, you know, I ran through an analysis not too long ago, and you look at the, you know, the hundreds of billions of dollars of taxes that they are bringing into the system. You know, just 7 companies, from corporate taxes to payroll taxes that their employees, on their employees that they hire, to the income taxes that their employees make. You know, they've created a lot of high wage growth and employment. They're paying a lot of taxes into the system. We're very lucky that those are American companies, and we can regulate them under American standards, as opposed to having somebody like China, you know, regulating them with their socialist communist agenda built into the whole structure of the systems and that kind of thing. So there are reasons for optimism, given the deregulation, the potential growth in the energy sector, which will help fuel and is needed to help fuel the AI revolution. And I think the AI revolution has an opportunity to play a very positive role, much like the Industrial Revolution did back in that earlier limited government period of time that we were talking about, when it created, you know, there were more jobs created during that period of time for
Than ever
working class
before.
people. It created the middle class. We absorbed more immigration than we ever have before or since. Something like 30 million immigrants came into the country after 1850, on a population base that at the beginning was only 50 million people. And they were absorbed and given jobs, and they worked hard, and they contributed to the growth of the system. So there are reasons for optimism out there also. And I think people need to be very aware of those.
Well, first of all, optimism should be what you breathe in the morning. Reality is pessimism. It kind of is when you look at the reality of things, but the reality is always the way that you view it. And I think that I think ignoring the bad things in life is a really big mistake, because
Yes.
you need to notice them and know that you need to know evil exists. If evil didn't exist, you wouldn't know what good was. So you have to know evil exists and focus on the good. Now, I'm an Austrian economist by nature, so the hearing taxes, I kind of want to hold my ear. Our taxes are good for the system, but that's just a
Oh,
modern
I'm not
monetary
saying
thing.
that. I
Yeah,
agree
no.
with you. No, I agree with you. I'm just, when I'm pointing out those Mag 7 companies,
Yeah,
the point that I make, I'm a very big free market person. You know, we had no income tax in this country until 1910 or somewhere in that time frame.
1913. Yeah,
Yeah, 1913. Yes, exactly. Thanks. And as I was talking about earlier, that was the fastest period of growth, the most upward mobility for working class people, the greatest opportunity to allow immigrants who were trapped in dysfunctional authoritarian systems, or failing socialist type systems around the world, to immigrate here and participate. All those things. I agree. The only point I was making, and I try and make this to people who tend to look at this from a different perspective, is if you want social welfare programs in this country, which we have, whether we want them or not right now,
correct.
if we're going to be able to maintain the viability of those programs, somebody has to be paying the taxes
Yeah.
that can keep those programs from collapsing and getting to where, you know, you can't provide any assistance to the people that they're, you know, hopefully providing assistance to, and that kind of thing. So, you know, having these successful companies based in America not only creates jobs, but it's also the basis for funding the social welfare programs, for paying the people who work in various forms of government and do provide good, you know, important services to the country and that kind of thing. So
Well, and I think the immigration conversation is a different one, but I will say back then immigration was a good idea. Now we have 330, 350 million people here. We have plenty of people who aren't working that could use jobs, that want high paying jobs. And I don't think our immigration today is anywhere similar to where it was in the late 1800s, early turn of the century. Right now, we have a big problem. We have illegals that are taking low paying jobs, and we have legal H-1B visas that are taking middle class jobs. So I think that we have enough trained and skilled people here to be able to feed the STEM system without needing H-1B visas, which, Todd, I think is going to be a very big topic in the 2022 midterm elections. I think it should be a big topic in this country when 63 or 65% of American-born computer scientist degrees from college are spending 18 to 24 months looking for a job and then taking one at a Starbucks. That's a big problem. So that's where I think Trump is going to have a very positive impact, is taking American jobs and getting them back to Americans. And I really hope more people talk about that, because having people from our own country working in the system, making money, paying their taxes, which I hate, but you have to do it. As long as we have them in the system, I think I think there's such a big turnaround just literally looming around the corner in America that it doesn't take much more than common sense to implement. And if anything, we have noticed that this administration is very high on common sense in most areas. There are certainly some things I don't agree with 100% of what anyone does, and that's my right as an American, as everyone else's right is. But I think I'm with you, Todd. I think that there's more to look at from a positive turnaround. I don't know how the next year will be or year and a half will be. It doesn't look good from an economic and market perspective, but of course the market can be inflated while the economy crumbles. That's one thing most people don't understand. But I think that in the next year and a half to 2 years, we have a ton of new jobs. We have more energy in the system. We have tariffs coming in. We have relief from taxation for citizens because of those tariffs. We have a growing economy that's growing organically. One thing that does scare me, and I want to get your opinion on, I think right now we have like $5.5 trillion committed from foreign nations to build manufacturing centers here in this country, which by all accounts is never a bad thing, right? I'm an entrepreneur, so the more capital I can get to build things, the better. Does it matter where it comes from as long as it's legal? Not really, right? If you're going to do good things with it. I do worry about foreign interference coming in here when foreign nations have this much control. It's kind of like a lobby, right? When I say I'm going to put $1 trillion to work in America, I'm not doing it out of the kindness of my own heart. What are your thoughts on all the foreign capital being infused in here? I think it's a good, we'll see how it turns out, is my opinion, but it's a little scary. It's exciting because we can build and we can grow, but at the same time, I would rather that money came from American entrepreneurs. What's your thoughts there?
Yeah, I basically, I mean, I agree with you on that idea. I think though that, currently at least we've got an administration, that is dealing in a very upfront and America first way with all of these international relationships. I think this was a critical thing for the administration to do. I've been from the very beginning very supportive of the tariff policies. I think two big things, which kind of get back to your issue about foreign relations and opportunity to influence. I would be a big fan of us taking the communist, authoritarian, hostile systems around the world, which primarily comes down to China. Most importantly, they're the only one with enough GDP to really be a threat right now, but also Russia, Iran, and North Korea, and trying to isolate those economies as much as possible. Now, China, we can't do that quickly, but we go back to the Soviet Union. That's how we won the Cold War, is by isolating the economy of the Soviet Union, and the dysfunctionality of that communist command and control system caused it to collapse on its own sword. I think if we can do that again gradually with China, we can end up in the same kind of place. We can't go there immediately because we're just too interwoven with them right now. The need for the rare earth minerals and some of these other things, that those things are too important. And I think there's too many businesses in America, that have become too dependent on China as a source.
Absolutely.
And so that this needs to be a gradual withdrawal. And so far, that looks like what the administration is doing with China. With the rest of the world, we just got into this position, this post-World War II position, where we had massively imbalanced trade relationships with people. And it wasn't just because, there's all these, we're both free market people here.
Mm-hmm.
I'm a huge free market person. But I hear all these free market people, the Wall Street Journal and others saying, well, these trade policies, they're going to start a trade war. This isn't free market economics, yada, yada, yada. And to them, I'd all like to say, well, how can you call, Germany with a 10% tariffs on our autos and us with a 2% tariff on theirs a free and balanced market?
Correct.
That's not a market where the most competitive economy on a level playing field wins the game. That's a playing field that's already stacked in their favor. So, I think the Trump administration clearly is taking a very aggressive America first position with respect to foreign relations and economic relationships. And I think as long as we maintain that kind of an attitude, the risk of undue influence as a result of foreign investment is probably containable. That would be my feeling about that.
I'll buy that. That's a great answer. Yeah, as long as you have something in place that sets rules and standards for the trade, I think it's a great idea. And I agree with you. The Wall Street Journal has become a joke over the past 15 years, and these people are free market in name only. They're propagandists. So they're trying to scare people away from what's clearly in a modern monetary theory. I prefer we're out of the system altogether. But in this theory we live in today, the way that money works today, you have to have fair trade balance. And I think Trump has been right for 30 years about this.
Yes.
If we're going to live in this system, why are we paying taxes to send to other countries when other countries can be sending their taxes to our people? And that simple, basic theory is one that opens the door for maybe the biggest boom in U.S. economic history, which would be leveraging the power of the tariffs to reduce or eliminate taxation on individuals. Can you imagine, Todd, what would happen if by 2028 we had 50% less taxation on everything across the board, just in income? Forget about property taxes, sales taxes. Income tax is theft, and it was theft before 1914 or the end of 1913. We didn't pay it. Our economy boomed. Every economy, when you put it in the hands of the people to decide what to do with their own money, they spend it anyway. They invest it, they build things, they create innovation on their own without big daddy government in front of them. And we've gone through this system where, I was on a podcast yesterday, and I had to explain to someone that the slaves in Genesis paid the Pharaoh 20% in taxes. Slaves of the Pharaoh paid half of what we pay in taxes today. We do nothing about it. Imagine if we paid slave taxes from the days of Genesis in the Bible. What would happen if every American had 20% more in their pocket? That's what I think the optimism is, and that's what I think tariffs actually ultimately do. Because if we're tariffing products and paying more, which is by the way, a minuscule amount, like a 1% or 2% increase in price.
Yes.
If we're paying even that 1 or 2% more in prices and continuing with the same taxation we have today, this is a recipe for economic collapse. But he has talked about it. We have multiple bills in Congress, which are never going to get passed. So I'm not an illusionist either. There's no way I think that the people in Congress today are ever going to lower our taxes without some sort of strong arm on that side. It's just too powerful for them. But can you imagine if something came through where we said, okay, we're going to cut the federal income tax in half because we have the other half covered by tariffs? What would that do to the economy, in your opinion? I mean, I see a boom everywhere.
It would be so big. Well, I think couple of things. First of all, it would have to be in a fiscally responsible way. I mean, part of the problem that's preventing right now, we have a spending problem. Sure. We do not have a tax problem. And I'll try not to run off on some numbers for too long. If I do, just stop me.
No, please do. Please do. I will stop you, Todd. If you confuse us, I'm stopping you, buddy.
So it's very important to keep that in mind because so many people confuse that issue. If you look at taxes collected, income taxes collected as a percentage of GDP for the last roughly 60 years, going back to the early 1960s, they have basically averaged between 17 and 17.5% of GDP through Democrats and Republicans. The Democratic administrations averaged like 17.4%. The Republicans averaged like 17.2%. So what that tells me is that taxation has gotten to about the political plateau. There's just too much political resistance, whether it's no matter who's in office, for it to get any higher. I agree with you. It'd be much better if we were lower. The problem we have is the spending side of the equation, which has gone up to where it's now like 23.5%, 24% of GDP. It wasn't always that way. It was pretty much in line with revenues as recently as the late 90s and 2000. But, I think we can go back to the Reagan administration, where there's kind of a misguided perception that there were these huge tax cuts. All they really did was flatten the tax rates so that the tax code didn't play as big of a role in redirecting money around to all these politically privileged purposes within the system. And just that alone helped trigger, that economic boom that we were talking about that lasted from 82 through the end of the 90s. And that wasn't even getting taxes down to where people had more control over where to put their money and that kind of thing. I think the best evidence for what you're saying, again, it goes back to, that period of time from 1800 to 1930, when other than in the Civil War and World War I, we had no income taxes. All we had were like excise taxes, which are taxes on alcohol and those kinds
nominal.
of things. Yeah, or tariffs. They were basically 3% of GDP. And our expenditure, 3 or 4%, our expenditures were lower than that. And we grew at the fastest rates that we've ever grown. We recovered more quickly from the downturns than we recovered from the downturns that came after that and that kind of thing. We had the best economy we've ever had. It was the best economy in the history of the world. So yeah, if we can get back towards that, and we can, either use tariffs to offset the spending, or ideally, we need to start getting this spending back down as a percentage of GDP. And if we can start doing those things and use that as a way to bring income taxes down, I agree. It will help kick off a sustainable boom unlike anything we've ever seen.
Yeah, innovation will go nuts. Investment in new companies, new businesses, new ideas, new technologies will absolutely thrive in that environment. And I talk to people all the time of different economic status, and almost everyone I talk to wants to do these things. They just simply don't have the means to do it anymore. And that's the biggest tragedy that we're living through right now, is the lack of opportunity for capital, which is why you're seeing the stock market boom in a difficult economic time. And I don't really care what anyone says. I live in the real world. It's a difficult economic time. Things are very expensive. Wages are fairly flat, despite what the government says. Jobs are hard to find. But Todd, if we actually experience that, I think you will see, number one, the stock market will boom immediately. If you had 10% of your taxes back, where are you going to put it? You're not going to put it under the couch. Your dollar's a melting ice cube. It's going to lose money. You're going to see Bitcoin boom. You're going to see people buying gold, buying stock, building assets for the future, where they're actually living in a position where they're comfortable again. And when you have a comfortable society that's happy, man, things really turn around quickly. What are your thoughts on the crypto market, the stablecoin bill, Bitcoin? Where does all this stuff fit? I know you're more of a traditional guy, but where is your head at with, let's just go with stable coins. I don't know how much I'll be happy to share with you, but what are your thoughts on the stablecoin market that's emerging?
Yeah, you can educate me a great deal. I think the stablecoin is the one area within Bitcoin where I have some appreciation for what some of the possibilities might be. It sounds to me like it's maybe a bigger deal in international payments and that kind of thing than it is here domestically. But this idea that there's a currency out there backed by dollars or something else that people can have confidence in, and that can serve as a medium of exchange for people, especially for people trapped in dysfunctional currency systems around the world and that type of thing. That I can clearly see the appeal of. Beyond that, I don't have enough understanding to really have a good grasp on what the opportunities or the risks are in the Bitcoin market. I do have a sense, and I'd be very curious as to your opinion. I'm very impressed with this David Sachs, who's kind of leading up both the AI and the Bitcoin stuff for the administration. and that my sense is the administration is moving in exactly the right direction with these issues. I don't know what your thoughts are on that.
Yeah, I mean, stable coins, the way that they're designed, are mandated to buy short-term treasury bills. So as you well know, our auctions are constantly falling off. Less and less people are buying our debt. So these stable coins become a digital representation of a dollar, and they're backed by US debt. So it's just another way of absorbing some of the buyers in the auction. You don't need auctions anymore. They'll be constantly purchased. But what a
Yep.
stable coin does is it provides a one-to-one dollar value. It is literally a digital dollar, and it's in the crypto space, so it'll be on blockchains offered throughout the world. I think it'll extend dollar dominance. The US dollar is the second most successful digital dollar or digital currency in the world behind Bitcoin. So it is the most commonly used as medium of exchange. Even Bitcoiners use stable coins to make payments. It allows for peer-to-peer transactions, so you don't need middlemen. So for cash type stuff, it's going to be great, but we have to get rid of the dependency on credit first, which is where most of our transactions on a retail side are coming from.
Yeah.
So think of stable coins as nothing more than a vacuum for US debt and a digital representation of a dollar. And you're right, the global south will profit from this. Countries will be using it, merchants will be accepting it. Bitcoin's a whole different thing. I'm going to send you a video on email, a couple of videos to try to start understanding that, because I think in your writings, I think you would be remiss not to include the opportunities that come in this crypto Bitcoin space. And Bitcoin is what I focus on, as you can see by the B behind my head here. I think it's going to be the pressure valve as we lower rates, increase inflation. I think it's going to take a lot of pressure off the dollar, as Donald Trump has said, and I think Bitcoin is going to be a major success in the long run. And I do think it will end up being used as some sort of a backing agent for future currencies way down the road. Not next year, maybe not in the next decade, but over time, if you truly understand that space of digital scarcity and uncensorable money and a trustless base layer for transactions, I think that's what we're really looking for. Because we've been talking about the Fed and what the Fed does and how the Fed basically dominates monetary policy and the future direction economically of a country. That's putting your future in the hands of 12 people that were unelected. They were appointed, that are making decisions, where I think in the future, you're going to see currency based on protocols of the laws of physics and thermodynamics and uncorruptibility in money. So we'll go through that in another episode. I'm going to send you a couple of videos. You're going to be my guinea pig, Todd. You're going to be the Bitcoin guinea pig. I'm going to bring you back on in a couple months, and I want to get your honest, valid opinion on how these things help assist a growing economy in the age of AI. I know everyone talks about gold as being the solution. You're seeing the BRICS companies pile up on gold. I don't know that anyone who understands the system will ever trust a government to actually back anything one for one ever again. We have 1,000 years of history of corruption when it comes to using physical commodities to back dollars, where I think protocols and immutable ledgers are going to be the future of all economics moving forward. So I got to get you up to speed on that, Todd. That's our mission.
No, I'd be very interested in learning more about it and understanding it. Clearly, we're on the cutting edge of financial innovation, probably not unlike what's happening with artificial intelligence on the technological side. And I think for America to be the leader in all of these innovations, and to the extent that they can diminish the dependence on a currency that, is at the, as we were talking before the show started, is basically managed by the Committee for Centrally Planned Interest Rates, the Federal Reserve. I think that's a great idea. One thing I don't think many people understand is, the gold standard, which really kind of came into being in the late 1700s and then ran throughout the 1800s into the early 1900s, it was created because of the inherent tendency of governments to debase and devalue their currencies. And so what was happening was these European governments, which continued to go into war, throughout that period of time, 1600s, 1700s, they kept printing too much money every time they'd get into war. Yep. They devalue their currency, and investors were losing confidence in them and becoming unwilling to lend them the money that they needed, either for the economy or the next time they got into a war. And so that finally forced Great Britain to create what became known as the classical gold standard, which was specifically designed to limit the government's ability to print more money than they could support with their gold holdings. And it worked beautifully until World War I came. And then what happened in World War I? the three major economies in Europe, Germany, France, and Britain, borrowed, engaged in massive deficit spending to fund the wars. There's the core problem, deficit spending. They borrowed way too much money as a result of the deficit spending, and they vastly inflated their currencies, and that blew the gold standard apart. And that problem wasn't really resolved until the late 20s and early 30s. That was actually the international cause of the Great Depression. There's two causes of the Great Depression. One was the international collapse of the international monetary system, which was a direct result or a delayed result of governments not being able to manage their currencies, because they always get into these situations where they engage in too much deficit spending, and then that leads to these inflations, and then that starts to distort all kinds of things. So yeah, to the extent that Bitcoin can be a solution for that, that's a phenomenal thing.
We're going to get you ramped up, Todd. We're going to get you out there. We're going to move on, though, because that's not your area of expertise, and I certainly don't want to corner you on that. We'll definitely do 2-3 months down the road. I'm going to send you 2 videos. They're about 2.5 hours, and a list of readings to look through, and I think that you'll be fascinated by them because they're written by economists, not Bitcoiners.
That sounds cool.
And I think it's a great way to see where it fits. Now let's look at the next quarter. I know most people are going to watch this. A lot of my viewers are investors and they like getting opinions. What do you see happening? We're right in Q3. What do you see happening economically through the rest of the year? I always like to get people's predictions. I'm not going to hold you to it because none of us are ever right, except in the rear view mirror.
Nobody's right about short-term economic predictions or stock market predictions. I think those are two things for everybody to be very humble about. Yeah, so I think the next quarter, next 2 quarters, they're hard to predict. My sense of things is that as these various initiatives that the Trump administration has been putting in place, and it's very important to remember, I mean, we're what, 6-7 months into this right now. And all of this period of time has been taken up with getting these initiatives in place and going. And some of the things like the tariffs, they're still not even locked in yet. We're getting closer to it, but with respect to China, we're still in negotiations there and that kind of thing. So as these things, kind of lock in and settle in, and people have a better understanding of what the playing field is going to be, I'm pretty optimistic. I think we've got these companies that are investing hundreds of billions of dollars in the build out for this artificial intelligence revolution. We've got the stimulus coming from the big, beautiful bill. We've got the impact of the tariffs in re-leveling the trading playing field around the world. And I think it will be helpful in bringing jobs back to America and that kind of thing. I'm pretty optimistic that if we can avoid some kind of a major financial economic mistake with the deficits and the debt, that we could get into a very healthy growth period somewhere, maybe it's 9-12 months down the road kind of thing. And maybe things are kind of stable or starting to build towards that over the next few quarters.
I couldn't agree more. I see like the end of this year being like a chop. Everything just kind of chops. And whereas everything is chopping along sideways, I think you're starting to see a lot more revelation, a lot more transparency coming with international trade. I think we will see onshoring beginning. I think just my projections are Q2 2026 is going to be one to remember. I think it's building up for that. But I also think that there are plenty of pitfalls that could happen in the middle. We have a very volatile world. If we shut off funding to Ukraine and shut off funding to these foreign wars, I think it's a big stimulus for us. But again, will that contain them? The world is very volatile, and I don't think anyone who's paying attention will deny that. But I think that we are watching peace treaties in small areas, right? Like Pakistan and Cambodia and some of these places. Any peace anywhere is a good thing for economics. It's a good thing for humanity. But I also know that there are plenty of power players out there who love wars because they make money on both sides of it. And I think that we're going to see some chop in the market for quite some time, which is a good thing. I think our dollar is going to get debased even more, which is actually part of a global reserve currency, is we've got to do that to stimulate global trade. I think that areas around the world are going to see a big boom that we never expected before. I think Africa is going to benefit greatly from stablecoins for their economies. A great home for natural resources and the things that we need. I'm kind of in line with you. I just kind of see Q2 2026 being really where stuff starts to kick off, because all of these programs are then in place. And then we have a good footing on what to expect moving forward. And then you see this initiative to build out and innovate. That's when it really kind of kicks off. I think we're pretty much in line there, Todd.
Yeah, I think there's a lot of reason to be optimistic about the underlying economic factors, while at the same time realizing that we have to be cautious, because the last 20 to 25 years has created this, range of economic and financial issues that are potentially threatening if they're not managed in a very careful way. These government debts, the deficits, the level of housing prices and stock prices and those kinds of things are all potential pitfalls that that we've got to be aware of.
Completely agree. Be cautious but optimistic. Cautiously optimistic is the best term for 2025, and I think 2026 is going to be amazing. Well, Todd, thank you so much for coming on here today. How can people buy your books? Where are they? Your Substack? Let us know how we can keep in touch with you.
Yeah. The book, 2008, What Really Happened, Understanding the Great Financial Crisis. That's Amazon.com is probably the easiest place to buy that. Substack, if they'll search On Wealth and Progress, they'll go and find, my newsletter is On Wealth and Progress, or with my name, Todd Sheets. And then I'm also putting out a weekly audio version, pretty much of the what's in the Substack newsletter. But some people would rather listen to these things in the car or at the gym. And you can go to YouTube or Spotify or Apple Music, and again search for On Wealth and Progress, and you'll find a 15-minute weekly little summary of these kinds of issues that we've been talking about.
Are you on any socials? Twitter, Facebook, any of that stuff?
Yeah, not in any meaningful way. Yeah, so that's probably the next step that I need to take as I gradually use this crane to pull me out of my little office here. So,
well, Todd, thank you so much for coming here and sharing this knowledge and a bit of the history. Fascinating stuff. I hope everyone buys your book. They register for your Substack. Just great insights. Can't wait to have you back on. I am going to send you some information. I've got your cell phone, so I'm going to send you a few links. We'll get you back on in a couple months, and I want to question a new person into Bitcoin, stablecoin, crypto, and kind of get your feel with your background. I think your voice will be great, and I want your honest opinion. Is it smart or is it stupid?
Yeah, well, look, I'd love to ask you questions. That my first couple sessions might be more of me learning from you than anything else. But
absolutely,
I'd love to. That sounds great. It's a huge thing, and I need to have a better understanding of it. So
happy to do it. Happy to spend the time, my friend.
Great.
Until next time, Todd. God bless you. God bless this country. We'll see you next time on the Rice Report. Have a good one, everybody.